The Senate tax plan gets over the hump. Ex-Defense Secretary Flynn pleads guilty, and the market goes thump. Does focus now change to political risk for President Trump? More about this when we get into the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. So the stock market had a wild week with huge disparities in the major indexes. Wednesday was a rare day. We saw the Dow Jones Industrial Average gaining more than 100 points, while the NASDAQ fell over 100 points. It was a wild one as the tech stocks absolutely got annihilated. We could almost call that a crash in tech stocks, which were very overbought and very ready for a pullback. It was a huge week for the Dow Jones Industrial Average as energy stocks, industrial stocks, financial stocks exploded to the upside. Dow Jones Transportation Index, which I'll show you that chart in a little bit, gains very near 7%. It was just a huge week for those transportation stocks. And it was the biggest week for the Dow of the year, actually since the election. And it was the NASDAQ's first real down week in 9 straight weeks, which was just a great strength that we had seen in that. Investors panicked on the upside on Thursday as the Dow moved up some 380 points at one point with this massive buying that came in, fully believing that, well, the tax plan, which the Senate was working on very hard, was going to be a big lift for earnings and economic growth going forward. The Russell small caps benefiting from what these tax changes would be, maybe the most, those small cap stocks, well, they really drove the market to the upside as we saw big gains. Of course, with the financials gaining, financials weigh about 18% of the Russell, and that moved up strongly. Also, the next Fed chair, Powell, came through Congress pretty cleanly, and that means Yellen policies are essentially going to continue. So that also was good for the financial stocks, which got a big boost. But then came Friday when the news came out that ex-Defense Secretary Flynn, he's pleading guilty to essentially lying to the FBI, and everybody is really afraid of what that means, of what could come out about President Trump. Now, that was a momentary panic in there where we saw the S&P 500 fall over 35 points, the Dow Jones in panic on the downside after panicking Thursday on the upside, down about 350 points at one time, but then the market rebounded back as news came out that the votes were there for the tax plan, and it was likely that there was not much that Flynn had on the White House, at least that they could tell then. So we got this big rebound again as the buyers came in on Friday. Show you that that chart on our hourly chart in a moment. So, you know, this rally seemed to stall as this tax plan got stuck, but then all the other news started to come out. Using dynamic scoring, this Senate version of the tax plan has over $1 trillion deficit, maybe $1.5 trillion deficit over the 10-year period. And this is what they really have been struggling with to get those numbers right so they could vote under reconciliation and only need 50 votes. What nobody is really talking about is the scoring of the CBO over the next 10 years for the deficit. The deficit is expected to go up by $9.3 trillion over the next 10 years. You just can add another trillion to that or more with this tax plan. So that's going to put our deficit of maybe close to $31 trillion in 2026. Weren't the Republicans voted in for the purpose of dealing with the deficits? Well, I don't even hear any conversation about that at all. So while investors are celebrating, as we're going to get some form of this tax plan likely to pass, the realities are probably going to be sinking in before you know it. And, with the extreme valuation that we're looking at here in the stock market, and with this tax plan finally done, well, they probably have very little to look forward to. And the question is, what really can drive prices higher? And now, with what likely to be a lot of political discussion coming out about what Flynn has, what he's going to disclose, what he gave up in order to get this deal, there's going to be a lot of discussion about the risk that the Trump administration has, so the market's going to have to focus on that too. And believe me, the Democratic voices are going to be really loud about what they're going to try to do to the president based on this. So we have political issues that we're going to be facing, and this market may have a very hard time making any upside ground from here, this extreme level that it reached. Let's take a look here as we look at our 60-minute chart of the S&P 500, which has a lot of news on it, and an exceptionally large amount, much more than we usually have on here. You can see on here what happened basically when you look at this market. It kind of drifted up in here and then exploded on the upside on Monday, and then had this huge move to the downside here when the news came out about Flynn. So it was a very, very busy news week. Monday we saw China stocks week again. That was pushing the market down overnight. Bitcoin then traded to 97.21, and gold started to pop. So it was kind of a busy overnight on Monday. What really affected the markets on Monday, though, were that you had this drop in oil that started to get some fear about what the OPEC meeting was going to bring. That ended up bringing a freeze in the cuts that they had all the way through 2018, so they're going to continue all that. Real estate stocks got a pop here on strong holiday sales, but then the market kind of drifted around on Monday. Tuesday, we saw the reaction to a great Cyber Monday, 17% gains, really a record, and that brought some buying in overnight. There was hope for the tax cuts, which ended up looking like they're going to pass here on Friday. The Powell confirmation came, and he talked about December rate hike likely, normalization coming to the market. Nothing really to scare the market in there. So it started to get a lift on the upside. But then North Korea tested a missile that went 10 times higher than our space station. Extraordinary distance that could get here to the U.S. The market then had a big break. It doesn't look that big when you see what happened during the rest of the week. A lot of volatility, so it made that bar look small. Senate Budget Committee advanced the tax bill as they got Corker and Johnson to comply, and the Russell soared as it screamed like 20-something points on the upside. A big update for the stock market there on Tuesday. Wednesday, GDP was revised up to 3.3%. There's some talk about 3.9% in the next quarter. The market opened higher, but then the tech stocks absolutely collapsed. And it was just a huge move to the downside in there. I think I said that was Thursday before. That was actually on Wednesday. On Thursday, OPEC held those cuts. Overnight, the energy stocks got a bid. Here is where Senator McCain backed the tax bill, and the market exploded on the upside again. There was some thought that there was going to be a delay in the vote of the tax bill, and then they had to work out all of those numbers. And then the news came out on Friday, and the market just absolutely collapsed, turned tail. You can see S&P futures traded down to 65.05, and here we are now with about 2 hours to go in the trading session, and you could see they're trading at about This was 26.05, 26.38 is where they're trading now. So they've rebounded 33 points off of their panic low in there, and getting this lift as they're thinking about the vote coming. I actually think that the vote's going to come and the market's going to give more ground in here. And then there's the weekend coming, and everybody worried about this political discussion and what kind of risk there is for the Trump administration. So I can't see the market getting much legs on the upside here, and could have a rough week next week. We're going to talk a lot about that as we get into the rest of the show. So that's the 60-minute chart, and all of that movement that we saw happened throughout the week. The volatility really has moved up strongly, as we expected that it would. At this point, the stock market mostly has had big gains. Dow Jones Industrial Average up 2.7%. The Dow Jones Transport's up nearly 7%. S&P 500 up about 1.5%. The Russell is up a little bit less than 1% after having that big gain, but then having a rough time here on Friday. And the NASDAQ down 1.2% on the week as the tech stocks have rolled over. And I did a recent video on Thursday, actually, on the different sectors in the market, and you want to see that, which are the strong and which are the weak sectors. Become a member and you can see that video and all of our videos, of course. So market overall pretty huge week, except for the NASDAQ. And the bond market, 30 years, about unchanged, and they had a huge gain today, over 2 points at one point. Gave a lot of that up as panic had set into the market and a flight to safety came in the bond market. 10 years down small on the week as that yield curve continues to flatten, and that was about a 2 basis point increase in the 10-year yield to about 2.37. The dollar, small gain on the week. It was up more but couldn't hold, got right into our sell zone and then moved to the downside. Gold down about $9 on the week. Its turn is coming on the upside, we believe. Oil unchanged post the OPEC meeting, as it really can't really make any upside ground in here, but we think that there is probably a little better prices coming in the oil market also. So what you got there is the all of the information on what happened this week, and we're going to be right back with our best and worst for the week. All right, for the best for the week, what we do is we look at stocks usually at the weekly charts and get some sense of what were the biggest gainers, what were the biggest losers for the week, and what were the biggest opportunities maybe coming forward. If we can point some of those out to you, that's always what we want to do. The retail stocks were clearly the biggest movers for the week. On the upside, they were very depressed. You had a really strong weekend both online and supposedly in the brick and mortar stores, and there was a lot of celebrating about that. We're going to take a look here at Macy's stock. Macy's is the biggest mover of the week. Macy's and Dillard's up about 11 to 12% each on the week as the brick and mortars really started to rebound. Take a look here as we look at Macy's. That's M. Now, what we have in here in Macy's is our cyclical analysis. So what you see on the bottom, those arches are called cycle brackets if you're new to our show in here. And what we do is we break it down into the most dominant cyclical patterns and the minor cyclical patterns, and then look for the repeating rhythms in the market. So Macy's got an upward pop right in here at this spot right there. That was kind of out of place for us. We didn't expect it to get that high, but you could see it moves into this resistance zone right over there. We actually expect that Macy's is going to fail in there, maybe be able to bounce around a little bit, and then probably get into this support zone right over here. That would be a nice thing to happen. I want you to note that what I'm going to show you is the majority of stocks that we look at to enter into corrective phases that take you into late December or early January, just like Macy's does. And that is basically signaling that there is likely some market correction out there, and that all this volatility that came in the market is likely starting that right now. Nordstrom's in this group was a stock that we liked and thought it was bottoming and likely to have a big upside move. You can see in here we had projected it to move up, and that was based on these cyclical patterns. Now you can see in here the declining phase, the rally phase, the declining phase, and this is the one we predicted would move to the upside. You had a very big upside week there, about 9% in Nordstrom's. Dillard's failed at about 14%, moved to the downside, and we think it's met resistance. The same thing for Bed Bath & Beyond, which was up, and we think it's no good, going to move sharply to the downside likely again after about a 7% gain on the week. Next stock I want to look at is Chipotle. There's been a lot of talk in Chipotle about it being able to, well, bottom, get some tone change in here about the difficulties that they've had, and Chipotle is looking for a new CEO. And that often brings bids into stocks. Now, we're looking for bottoming to come in about a month's time in Chipotle. You can see in here it's had this big upside week, and to us that it's likely it's going to stall in here and then roll over one more time. We think that if it pulls back under the 280 number again, and we think it's likely that it will do that, then that would be a great buying opportunity. But big up week in here, 9%. If it happens to get over 332, that's going to be a very bullish occurrence. We doubt that it'll happen without one more pullback in there, however. Now, the transportation averages, as I said, just absolutely exploded. We want to look at some of those stocks because we had airlines have a great week. Excuse me. We had the railroads have a good week, and the shippers have a good week. So it was kind of across the board, and the Dow Jones Transportation Average soared to a new high. And for those people that are Dow theory watchers, we have a Dow theory confirmation in here as the transports move up to a new high. So it's really a strong move. I want to give you a little peek here at the Dow Jones Transportation Average as it blows out on top of a megaphone or broadening top that was forming in there. So again, just like we see in the rest of the stock market, we're looking for this corrective period into January. So we think that this period, this big rally that we had right on here is likely to consolidate, but then early part of the year, it's probably going to move up again. So Dow Jones Transports have a major upside move in there. Take a look at LUV in the airline category. This was the biggest airline gainer, up about 10% on the week, along with Spirit. You could see that upside gain. There's a small pattern and a big pattern in here, and to me they're very clear. You could see the small patterns right in here, 1, 2, 3, and 4. Fourth rally right there. Here you go, 1, 2, that made the big correction, 3, and 4. There's that advance, and that's where we're in right now. So this one looks like it still has upside to me, and you could probably get up here and test this last high and resistance zone, and I would call this stronger than some of the other charts we've looked at. SAVE, which is a stock that was really beaten up, has now had a tone change also. You can see that. Again, it's gotten up to this resistance around the 38.2 near the 34-week moving average, which you could see stopped it way over here. So we're going to look for it to roll over, correct into January, and then very, very likely have a better time of it after that. So this is probably a major bottom that's forming in here, but we think it's about run its course for this moment. Take a look at CSX. Which was the biggest of the railroad gainers, and you could see a very similar pattern in here as it's now trading up this kind of upward channel that you can see. And again, looking for a retracement here into towards the end of the year and then up again. So very common, we call that synchronicity in the cyclical patterns where they've had big gains, but well, they're looking like towards the end of the year is where they're all going to move to the downside. Union Pacific up 7%, Norfolk and Southern up 7%. This railroad group to me looks very good for the long term, and I think you can be buying it if they get some pullbacks in here. Take a look at Federal Express, FDX, and you could see this has got our colored phasing in it. So I want you to see this kind of green, yellow, green, yellow. That's when you get into corrective zones that are tracing out upward patterns, and you could see this 34-week moving average. Well, couldn't quite get down to it here. Comes down to the intermediate support zone and explodes on the upside. 7% gain. Both UPS and Federal Express have this same pattern. This is basically the second week off of this low. It's not likely that it's going to roll over very soon. So this is a very strong pattern, and we would expect that any pullbacks in here could be bought. So that whenever you see that green, yellow, you know that it's just an extraordinarily strong uptrend. 34-week moving average often tells the story, and this is a very, very good looking pattern. So that's a look at the transportations, which drove the market also, as you can see, with this big week that they've had. Last couple of weeks we've talked about a bottoming in Teva, T-E-V-A, the generic drug maker. They had a corporate shakeup, and their new CEO is talking about their turnaround plan, and Teva has gotten a bounce. We had looked for a bounce to come, and we actually think that there's more to come in there, and here is the look at the bottom that formed. So the gain in here for the week about 10%, which is just fantastic, right? Here's your morning star pattern that formed. Note the 34-week moving average. We talked about it helping stocks on the upside. Well, it stops stocks on the downside. So a real good strong look at that. Here's the projection lines up here, like about 1930. I mean, that's like 4 points on the upside. We think it could make it up there to those other kind of highs that it had right up at this point. So Teva moving up. If it pulled back, I think you're going to get a decent opportunity in there. Financials had a big week, as we said. Bank of America, you can see this was the big gainer, about 7%. And another stock that looks like the corrective period in here, and for XLF also in towards the end of the year. So we think that we're starting a correction here on Friday that is could last for quite a number of weeks. So Bank of America had a good upside week, gaining about 7%. JP Morgan, you could see a lot of similarity in there, and a lot of the bank stocks or financials look like this. You can see that green-yellow pattern, the 34-week moving average. It's just incredible how well that works. And just as we see in Bank of America, it's starting to reject in here, and we expect to see about 4 weeks of correction. We think it'll dip down under this $100 area and then move up again beginning part of next year. So you can see all this is lining up to about a month's long correction when you see that. So the entire financial group looks this way, like it's likely to dip and then get a rally. Let's just take a peek for you could see at the XLF, and you could see it's almost identical, right? That's all of those financial stocks where it looks like it's calling for a drop for about a month's time and then moving again to the upside. So that's kind of a peek at the financials. And at the very best stocks for the week, coming up now is the worst stocks for the week. So the techs had a rough time this week. A lot had to do with the fact that they were very overbought. A lot had to do with analysts coming out and saying, well, Bitcoin had it. And what would be the connection between Bitcoin and the financials? Well, some of the semiconductor stocks create the technology that powers the blockchain technology, so that people felt that if Bitcoin was going to stop, well, that those stocks would correct. They got very overpriced. I talked recently about Square, that Square had been just immensely overpriced, had been trading at 110 times earnings. And that was all about them starting to take Bitcoin, and that as they're transacting in Bitcoin, and that gave Square a massive boost. But Square lost 18% on the week. And actually, it might have rebounded a little bit since the stock market got a pop back, but not very much. You can see we had talked about this pullback and projected it, and there's your support zone that it's coming in right now, just this massive decline. This looks to us like it might have another couple of weeks. It should hold up in this 33 to 36 area where that support zone is. And if you wanted to do some buying, I think it would be in that area. So the projected PE was up at around 110. It's now given up a lot about that. It's probably in the 90s right now. So still quite overpriced, but likely to get a bounce. You can see in that support area where the cyclical pattern suggests that it ticks up. BTIG came out and said plainly it was overdone, and this Bitcoin scenario was a problem. Autodesk, the next big loser, this is a factor of earnings just not being good enough. The earnings came out approximately in line. This is another stock that is immensely overpriced. Just you could see that big collapse to the downside in there as it loses over 15% on the week. Now note the 34-week moving average, and note the window of time that we thought that it would come down and correct into. So it's done that exactly. Maybe it has another week or two, then it tries to rally. That's this right in here. So this is pretty much an area where you would expect it to be able to hold on the downside. If it gets below this area at about 99, it's going to be a major breakdown and a major top. So we'll be watching for that to see if it could get down that far. So that would be what we call a cyclical cycle support break if it did that under the 99 area. So we'll be watching closely for that. We expect it though to bottom fairly soon. That's a look at Autodesk. Some of the other techs, especially in the overdone semiconductor category, Micron, which has been just a powerhouse. Look at this pullback in here. I just told you how expensive Square and Autodesk is. This is the other side of that story. Micron, after this pullback, is trading at about a 6 PE. I mean, that is just crazy. Yeah, it's got maybe another 2-3 weeks of correction in here. I think it's a strong buy between 38 and 41 in this area here. The probability of it getting underneath this rising 34-week moving average is very small. So in the next few weeks, if the market continues to give ground on the downside in here and the techs continue weak, which you expect, for just a little bit, then I think Micron is a very strong buying opportunity. Take a look at Cypress CY. You can see in here the same type of a pattern in Cypress. It's got about another 2 or 3 weeks to go. When it comes down to that support area, it's probably a buy around 14 to 14.5 in Cypress. NVIDIA, NVDA, which has been just smoking it on this Bitcoin thing. Look at these fib extensions that stopped it right there. This is also a high PE stock, about 55, and this is a look at the 13-week moving average, which has given it support. I think because of the way this turned over and all the time that's left in this cyclical pattern, this one actually calls for a short-term low in January, a rally, and then another low way out here in April. So it probably should be something like this and then more down. So that could be a major top that's forming in this very expensive stock NVIDIA. Western Digital is another one, WDC, for us to look at, and you can see a major diamond top that formed in here and a breakdown. We're going to call this one in a lot of trouble, down about 9% on the week as analysts downgrade that stock. And Applied Material, which makes materials for semiconductors, a pattern very much like the semiconductors, where it's likely to come down for another month. The buy area there is probably around 45 bucks. So it's got room to fall in there and likely still in trouble. One of the stocks that we really liked was Twitter, and we saw it moving up sharply and then get a pullback, also a timely pullback based on our work. So that's TWTR, and this stock to us looks like a strong buy. Look at this intermediate support zone that you can see right in here, and look at the cyclical patterns. So if you look at where the declining zones were, or phases as we call them, you could see that here and here and here and here. See that? And here and here. This is what we call a right-hand translation. In other words, it's correcting way on the right side of this. When it did that right over here, almost identically, you can see that. Once it made the bottom, touching support, it exploded to the upside. That's what we see in here right now, a potential explosion to the upside. I think the stock is a strong buy between this 19.5, 20 area in this next week or two, and then I can see potential for a strong move up. Our minimum objective would be 2270, and I think if you buy it at 20, you might even get it off at 23 or 24. So I think that we're coming to an important buy area. That's what we want to show you. Even in the worst stocks of the week, you get some great opportunities. One more that we'll look at that I think is an opportunity. I've been recently talking about gold, which I think is going to catch fire pretty soon. This is gold, GOLD, which is Rand Gold, the stock. Look at this beautiful pattern that we're looking at in here. It's got this upward stair-step pattern going that looks very much like it's likely going to bottom right in this area, somewhere around 89 to 90, something like that, and then get into this positive area. This is the gold pattern right in here. This is the GDX pattern right in here, and this is a Rand Gold's pattern looking to bottom right in this area. So right in this window of time, the next few weeks, looks like when the bottom comes in Rand Gold, and I think it's going to move to the upside. Rand Gold down 6% on the week, and I think that that gives you a good sense for an opportunity there. So that is the best and worst stocks for the week, and what we're going to come with now is our short-term view for the coming week. All right, short-term view for the coming week. Before I get into that, I just want to let you know that if you like our charts are available to use on the Thinkorswim platform. Thinkorswim, of course, the platform for the parent company, TD Ameritrade, which is our preferred broker. So if you wish to get these charts on your platform, all you have to do is write me Slim at askSlim.com. I'll be glad to send you a half-price link, and you'll be able to get our full service if you do that, which is all of the charts that we put out every single week, 24 futures, 56 of the best traded stocks out there, plus resources to be able to ask me about other stocks. You also get our market condition indicator, our option bias indicator, and then of course our rankings and setups and all of our videos. So it's a massive amount of service, and if you write me, you can have that half price link, and you'll be able to experience all of that, just a crazy low amount of just $64.50. So please do write me for that half price link. Okay, short-term view for the coming week. What we always do is look at the daily charts, and then take an accountability of what we expected would happen in the coming week, and then also look at accountability of what we did last week, and then look going forward at what we think is going to happen in the next week. We got light crude pretty good. It fell, a few pennies lower than we expected it to. We were right on that. The dollar-euro currency, we were spot on. Gold and silver, the patterns we got right. Silver was maybe a little bit weaker. Gold fell a few dollars through our number and then turned up as we expected. The bond market, the numbers I'm going to show you were different than I showed you last week because there was a roll in there. And we're going to be sending out new charts to our subscribers, by the way, with all of some of the new things because of the roll in the bond market and the changes in the big move in the stock market. So our members will be getting updated charts this weekend. So the bond market, we got half right. We think that that the bond market move that came on the upside on Friday was basically the part of it that we missed, but we got everything else correct. S&P 500, well, I'm not exactly sure if we were right or wrong. I mean, the market screamed to a new high, and at the same time, the NASDAQ broke exactly as we expected, and then the broad market broke as we expected, but about 2 days later than we expected. So it was pretty close, and we're going to give ourselves about half credit for that. Overall, we're about 65 to 70% for the week, which was a very strong week. And I'll show you what we expect to come in the next week. So we're going to look at light crude first, which is right here. Now, again, we're looking at the daily charts, and what we expected to happen last week was that we get a pullback to about 57 and then move up. Well, it pulled back in here to just under 57 through the minor support and then turned up. So the pattern was spot on. We were a few cents off in there, and now what we're looking for is it to move over this 59 area. You see this 50% extension number at 59.50. 59 to 59.50 is our upside target for the week. There's another number up here at about 60.60, which I wouldn't be surprised if in the next couple weeks it was able to get up there. But we're looking for a choppy upside week in there as the market begins to digest its OPEC is going to hold those prices and those cuts for all through 2018. The question is on Russia, whether or not they're going to let that go without creating more oil. And this is an important number right here. So I want to point that out. That's at about, well, let me give you the exact number. That's support. That's at about 56.76. If it breaks under there, the whole bullish scenario is gone right now. So you want to keep that in your mind. That's an important number. So target up here, 59.50-ish, and this important number right over here, about 56.79. If it breaks that, there is trouble. We're going to call it a choppy up week in there. The dollar index, DXY. Look at that right in here. We thought that the dollar would bounce and then fail, and that the sell zone was 93.22 to 43. It gets right into the sell zone right over here and fails. It's exactly what we expected. The euro currency did the opposite of that, of course. It hit into the buy zone and then bounced, which is what we expected. We expect this small down week in here as it gets back down to the support area in the dollar coming. This is about 4 to 5 days on the downside, then maybe turning up Friday or Monday the next week for a small bounce, but we think the dollar overall is in trouble. /6E. Here is your euro. We thought it would get down into the minor buy zone and then move up. It exactly did that. So perfect action in there. We expect to get a small up move this week, getting up to the 78.6% at about just over 120. So we're looking for small moves in there in the currencies this week. Dollar moving to the downside, euro moving to the upside. I think if there's any risk, the risk is that I'm wrong about the magnitude and that the dollar falls harder and the euro rallies stronger, but we're kind of looking for small moves in there. Now, for the gold market, /GC, what we were looking for in this last week was that it would get down into this minor support zone in this area of about 1279 was the downside target. It got under there and then it exploded to the upside. So the pattern we got exactly right. It got a little bit lower than we expected in there. So we mostly get full credit for that one. What do we expect the next week? Well, you can see our projection in here is that it gets up and tests this area just over 1300, maybe 1303, and has an upside week. This little upside turn that you can see in there in that cycle is what we're really looking for, and this is a nice positive formation right in here, bottoming here and then turning up is really what we're looking for. So an upside week in the gold market, /SI is what we're looking at now. And here we thought that silver had more on the downside. We thought it was weaker, and that it would, if it was going to do anything, it would turn up late week. And so it acted as we expected, pretty weak. Now we're looking for a couple more days in here and then it turning up. Also, we're going to look for a small up week in here, but we don't really have a projection because we don't really have the bottom in here yet. I would say into the slim ribbon makes sense. That's that ribbon that you can see right there. So you might get a bounce up into the 1670s area there, and then it hits that resistance. So we're looking for small up week in silver. The bond market /ZN. Now again, we're going to send out new charts because the numbers have changed because of the contango. Backwardation that was in the bond market. So the numbers are a lot lower. Now you can see the small patterns that are in there, and well, just absolutely gorgeous. See this rally and this sell-off? That's this. See the rally and the sell-off? That's this. And then you could see it following these patterns beautifully. And then that rally there on Friday. So we got basically what we expected in the bond market. It rallied up near the area we thought that it would and then rolled over. We didn't quite think that it would have the big update that it had to here when the markets panicked this morning on Friday, but what we're looking for, as you can see, is more upside. So we think the stock market's going to have a rough time. We also think that the bond market is going to be a temporary flight to safety. So the ZNs, we're looking for a rally. We think that it'll probably be a small upside week because, well, the shorter term duration bonds are not acting as well as the longer term. So we think maybe up to about this area, 2430 or so on the upside, as you can see right there. And we think that, if there's anytime the stock market pops this week and the bond market sells off, we think that's a buy for the bond market for traders. In this case, we'll look at the ZBs, and you can see in here a better pattern, right? Because the ZNs are kind of trading down. These at least were sideways for the week, and it got up right into our zone basically, and then moved down, and then had this big up day on Friday. And again, we're looking for this 78.6% fib to get tested. We think it would only be in a period of panic because we think the bond market is in a bear market, and it's just in this kind of upward bouncing period right in here within the bear market. So this looks to us like it could get up over the 155 number, maybe up to 155.14, which is this level right over here, but it's going to be tough to hold rallies, even if the stock market is as weak as we expect it to be. And we think it'll be moving down again by the following week. And you can see the patterns, how we have them projected right in here. That big dashed line is this one right over here. The smaller one right over here is this one right in here. So we're in this rally phase right now, and we think it'll pop right into there, but not really be able to hold the upside. So that's a look at the first 4 of the 5 markets that we look at. Now, the stock market, again, it's had a thrashing week. I mean, where you had monstrous moves in the Dow Jones Industrial Average, monstrous move in the Transportation Average, and big decline that we saw in the NASDAQ. The NASDAQ followed the pattern that we expected, just spot on, absolutely perfectly. Came and fell right into the zone that we expected, even did it about the day that we expected. The S&P 500 and the broad market, responding to the tax plan, they held up better. They had bigger gains, and then they turned down on Friday and kind of created the pattern we expected, but about 2 days later. So overall the patterns were right in there. We weren't right as far as the level that the S&P 500 would turn down from. So we only get partial credit for that one. Let's take a look as we switch over and look at the S&P 500 and the NASDAQ, and take a look at these patterns and what we expect for the next week. So we have a huge hanging man going on right now. That's this day right over here. It had the big break, touched the minor support. It did it on day 11. We expected it to be on day 10. So that's kind of a day off. It also, the downside that we were looking for it to test last week was 2587. Now, the downside was 2603. So because it made a higher level, got up into this fib confluence and then failed, it didn't quite get down to the level that we expected. And it took this panic about Flynn to get this to move down that way. So you can see what we're looking for. We're looking for it to give ground early in the week and then bounce and then begin to move sharply lower. We're going to call it a choppy week in the S&P 500, but a downward bias. And my notes essentially look like this, okay? Giving up ground here maybe Friday and early Monday, trying to rally back, and then getting into a very dangerous time. You can see this minor support zone right in here. I think it's going to easily break on the downside. So the question is that the spot that we're going to get support, which is in the S&P 500, 2603 down to 2593. That's where I think it bounces and fails from, actually. And then the next level down over here, which may be 2 weeks away, is 2572. Everybody's looking at me and saying, what, are you crazy? This market can't fall that hard, but it actually can. And you can see our projections right in here as we believe that there's a correction through this date right over here. I showed you all of those charts that look like that we're going to correct into the end of the year. Well, this cycle ends on, I just highlighted that for you, on 1/7. So that's like the first week of the year. And that's kind of the pattern I think we're going to see in this corrective process as this market starts to give ground in here again. That hanging man is a problem, and we'll see if we don't get more selling coming in yet today and we lose the hanging man because it turns out to be a pretty big down day. So we're going to see as selling now starts to come in again a little bit as we get into this last hour of the day. S&P 500, we're going to look for it to, at very best, get support in this minor support zone, 2603, 2593, and I think it could be worse than that on the downside. The NASDAQ NDX, you can see in here, it followed the pattern that we expected with the decline into the 10th day off of this low. That's 10 days from here. This one was 10 days from here. This one was about 8 days from there. So it's already in this next declining period as far as we can see. That would be that this has already happened and this rally happened and it's already moving down. We believe strongly it's going to get down to this level over here at 2625 down to 6225 down to 6175. That's that area of short-term support. We think it's going to get into there in these next 5 days and then maybe to the bottom of the zone in this next 8 days right in there. That's how that cycle counts out, 7 or 8 more days. So a lot of risk that we see in here. If you remember, you'll note that we put a trade setup in on the NASDAQ. It's about this having already broken down and the kind of risk that we see in here in the NASDAQ. I mentioned last week that I thought the VIX was going to go up for about 3 to 4 days and that we were in that period for that to happen. You can see in here the VIX absolutely exploding, and it actually did it for 5 days. So what does the pattern in the VIX look like? Well, I think that the VIX is going to trade between this, well, we'll just call it 12 right over here and 15 up right over here. So we can get some more pops in here, play around, and then this is 2 weeks out where I saw that bigger potential decline coming in the market where we could get to 15 or even way higher in the VIX as we get into a real corrective period. We're going to look for a range in the VIX of approximately 12 to 15 and for implied volatilities actually to be elevated as we expected and continue to be elevated. That is a look at the short-term view for the coming week. Follow me on Twitter at askSlim. Become a member on YouTube. So all you have to do is go on there and follow us there. Make sure you give me a thumbs up if you like this video, and if you want to get our charts, write me a email for a special. We have other specials going too, so if you don't want to do the charts and you want to do something else, I can send you special half price links for our other content also. I hope you enjoyed that. Lots of information and lots of potential for trading in the market that we might not have had in a very long period of time. I want you to be careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.